Berkshire Hathaway shares off today with the broader sell-off following soft fourth quarter 2019 results over the weekend. Meyer Shields, managing director at Keefe, Bruyette & Woods, a Stifel company, maintained his market perform rating but lowered his EPS estimates going forward, and he joins us now. So you note that Berkshire showed less resilience to economic and some industry-specific challenges than you expected. How worried are you about the setup for them for 2020?
So worried might be overstating things a little bit, but I think that there are some pervasive challenges that are going to limit earnings growth over the course of the year, whether that's maybe the second wave, if you will, of the U.S.-China trade wars. If the coronavirus can be viewed as that was a bit of a headwind. They had a fire in one of their Lubrizol offices within McLean. They had talked about both pricing pressure and rising expenses. And I think that those issues all seem poised or positioned to continue over the course of 2020. So I think that translates into a weaker near-term earnings outlook than we would have anticipated before.
Meyer, just in terms of what you're seeing, the corporate structure there, we have an interesting move happening at Geico, which is, I guess the canonical portfolio holding, if you will. And you look at, succession planning, there wasn't as much perhaps as some may have wanted in the annual letter, though I think the setup is kind of clear in terms of running the insurance and the operating businesses differently. Is there any view on, how does that factor into your view of the company right now? Certainly, you're going to have your model for what happens over the next couple of quarters in the next year, but thinking longer term about Berkshire, did you get any clarity that you were looking for in terms of where this company might go over the next 5 or 10 years?
Well, yes, let me break that into two parts. I think you're right in terms of the assumption that Ajit Jain retains senior management responsibilities for the insurance operations and Greg Abel kind of everything else. And that seems pretty clear, and I think it seems pretty appropriate given their individual track records. On the downside, we saw another example of Berkshire's disclosures kind of deteriorating, where we got less information about the revenues and pre-tax profits of the entities within Berkshire Hathaway. And that's another element that I think is not necessarily relevant to the operating earnings of the company, but it is relevant to how people will perceive it. Because if investors know less about the company, and that certainly seems to be the trajectory, then that should and probably will impact how they value it.
And then kind of along those lines, it really stood out to me how much Buffett tried to emphasize, I guess, that the securities holdings, right, the companies they own are business ownings, if that makes sense, right? He's breaking down the amount of dividends paid into Berkshire Hathaway by the likes of Apple and others. Is that to you? Because I think I kind of read that as a, hey, look over here. And to your point, don't look over at the deteriorating economics of some of the businesses we wholly own. Is that, in your mind, kind of a thing that Buffett's trying to hold a shiny object at shareholders while there are some problems with the companies that they have?
Well, I like to be on the skeptical side, but this is actually something that Berkshire or Warren Buffett have been talking about for a long time. And the long-standing phrase for it is look through earnings, where the sense is whether they own an entire company or part of a company, then they should get credit as owners for their earnings and not just the cash that's transferred through dividends. So I take your point, and there was certainly a lot of softer or bleaker parts of the earnings picture than I would have anticipated before. But to their credit, this is a topic that they've discussed in the exact same context, in the exact same tone for a long time.
Hey, Jared Blicker here. I want to ask you about the $128 billion in cash. Lots of speculation of when is it going to be deployed on something other than a few share repurchases. But in my mind, I got to think that Buffett is holding out for some bargain, and we really have had this market melt up for most of the last few years. Any sense on what the timing would be and if the market conditions are a part of that?
So I think the market conditions are absolutely a part of it. And then it cracks it wide open, because almost any enterprise anywhere in the world is theoretically a target. It doesn't mean that they're going to buy anything anywhere. But if there's an attractive business located somewhere with an attractive price, then I think they could execute on that. But to maybe answer your question a little more specifically, I think it's in very keeping with the long-term discipline of Berkshire Hathaway to say that maybe one of the best, if you will, bangs for the buck for the cash pile is to buy back shares of Berkshire Hathaway after there's a senior management turnover, which I suspect would make the shares a lot cheaper than they were the day before.
So a 14-page letter, lots of numbers, lots of words. If you don't follow Berkshire, though, a lot. You say that there's deteriorating disclosures. Can you, since it lands on your desk and you read it and it seems like there's a ton in there, what is it that you want more of?
So it's a great question, and I would say if you take the long-term view, you can look at different units whose results formerly were broken out and described and no longer are, and you get lumped together. So this year, it was a deterioration or a decline in the amount of disclosure for the Berkshire Hathaway energy companies. Last year, we lost the entire finance and financial products segment, or a couple of years ago, the finance and financial products segment. Their operations were allocated elsewhere. So what we're looking for is the ability to sort of track performance over the medium or long term so that we can analyze how different components of the Berkshire Hathaway story will respond to different macroeconomic conditions. The inability to do that, in addition to just the increasing summarization of the data, is something that we think is a paramount risk for investors because, frankly, a lot of people know about Warren Buffett and his unparalleled historical track record, but they don't really know what's going on at Berkshire Hathaway. And to the extent that they are forced by minimal disclosure to know less about the operations and to rely more on Warren Buffett's track record, his personality, one hopes that he lives forever, but I'm not sure that's the way to invest.
Meyer Shields is Managing Director at KBW, a Stifel company. Great talking with you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.